Well, the Bank of Canada is set to announce an interest rate later today. Several economists are expecting the rate to hold. Let's see what our next guest thinks. Joining me is Jason Daw, head of North American rate strategy at RBC. Jason, thanks very much for joining us. Is this the worst kept secret? And what might surprise everybody? What would it take to surprise us with some kind of either a cut or a hike?
Yeah, it's been our view that the Bank of Canada is going to be on hold at this meeting. It's widely expected from the consensus in markets. The bank is trying to navigate a lot of different cross currents, from trade policy uncertainty to the population growth shock. Going forward, we think most likely they're on hold for the balance of this year. There is some two-way risks, but they seem to be pretty comfortable with where policy is at the moment.
Jason, from my perspective, one area that we've been focused on is, this dynamic of the trade-off between, do they care more about the inflation concerns versus the job market? And, obviously the stability in the job market is certainly questionable. Kind of where do you stand on their preference of focus between those two drivers in the economy?
Yeah, I think what we learned in 2025, at least with the data that we have at hand, is the economy was a lot more resilient than people generally thought. There were pockets of localized weakness. Manufacturing and trade-related employment was soft, but the rest of the economy did okay from an overall growth standpoint and an overall job standpoint. Obviously, the bank is very focused on inflation. That is their mandate, but they are going to take cues from the growth side. And at least up to this point, the economy has looked a lot better than people have feared.
And earlier we were talking about the U.S. dollar and Trump's thoughts on that. Is our dollar and what's unfolding down south of the border, would any of that have any effect on the Bank of Canada and their decision?
People like to speculate that the currency is going to have an impact on monetary policy. We've seen historically that is mostly not the case. You would have to have something pretty extreme happen. And in a scenario, even if the currency got a little bit stronger or a little bit weaker from here, it does not really move the needle for the future outlook for monetary policy.
Another hot topic beyond some of the currency drivers across the globe right now is the idea that we're starting to see questions around independency of central banks, particularly driven by the Fed. Do you think the BOC is focused on that, or they're basically that's someone else's problem? Or how do they think about Fed independency as it pertains to their policy, if at all?
Yeah, it's a good question. I think, the discussions in the U.S. as far as FOMC independence are a little bit overblown, and it seems like, the pendulum is probably going to swing back into the direction that we've normally been accustomed to. For Canada, there is no real direct impact. I think, with at least Carney as the Prime Minister, he respects the central bank. That's been a long-standing tradition in Canada. I don't really see that changing. So any impact on the Canadian side would just really be a residual effect through anything that's happening in the U.S. through monetary policy.
I just want to go back for a second. You mentioned about the population growth. We had a big conversation about that. It seems like it's faded out a little, but is that still, or the depopulation? I guess we saw the population shrink. Is that still having an impact? Are the repercussions still being felt from that?
100%. I would say, there is trade policy uncertainty that's happening. That's an important thing for the Canadian economy. But even more importantly is what we're facing from a population growth standpoint. So through the first 3 quarters of 2025, population growth was flat. And that's probably going to be the case for the foreseeable future. And that will, that means we have to recalibrate, what we think is good or bad economic data. It is going to be slower going forward on a trend basis because of population. And unless immigration policy is changed, that is the run rate for the foreseeable future.
Last question from my side, Jason. We obviously, I think you and many others expect a hold for this particular meeting. But what's your outlook for the rest of the year? Do you see additional cuts, or do you think we're pretty much unchanged for the BOC and a status quo for the next 12 months or so?
Yeah, I think as a base case and probably the path of least resistance for the Bank of Canada is to keep policy rates at the current level. They have been characterizing those as appropriate levels generally kind of in accommodative territory. There is obviously two-way risks. I think for them to cut interest rates, we would need to see the economy be materially weaker than what we've seen up to this point. That's not our base case. That's not the Bank of Canada's base case. And then on the other side of the equation, there is a path to rate hikes. We think that those are most likely to start in 2027, but they could be pulled into 2026 if the economy is growing above trend as we expect as the year progresses.
Okay, Jason, we'll wrap it up there, but thank you very much for joining us.
Thank you.
Jason Daw is head of North America rate strategy at RBC.